Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BRAINAURORA-B interim report. BRAINAURORA Medical Technology Limited offers a wide range of medical technology solutions for hospitals and research projects in mainland China. The company's products include digital therapy DTX, products for cognitive impairment, brain function information management, platform software system, basic cognitive testing software, cognitive ability supplemental screening and assessment software, dyslexia supplemental screening and assessment software, COVID-19, induced cognitive impairment assessment, and recovery training software, ADHD assessment, and treatment software, quantitative cognitive assessment software, for depression treatment. Software cognitive impairment assessment and treatment software solutions, in addition to these products. The company also provides marketing services. The stock price of BRAINAURORA-B has skyrocketed by 157.66% over the past year, with a notable surge of 125% in mid-September 2025. Several key factors have contributed to this significant increase. The company's inclusion in the Stock Connect program led to passive buying and fresh inflows of capital, creating liquidity dividends. BRAINAURORA-B also benefited from a scarcity premium due to its unique market positioning as the first domestic stock specializing in digital therapeutics for cognitive disorders. Additionally, government policy announcements regarding emerging industries, such as brain-computer interfaces, have bolstered investor confidence in companies like BRAINAURORA-B. These factors combined have driven the company's impressive stock price growth. The primary drivers of revenue growth for the company can be attributed to several key factors. The launch of new products such as BRAIN-01 Moan device and the personalized cognitive training intervention system have contributed significantly to revenue growth. Additionally, upgrades to the virtual human intelligent evaluation system and the receipt of proceeds from listing in 2025 have also boosted revenue. Furthermore, an increase in the number of hospitals purchasing the system, higher usage frequency by patients, and increased sales volume have all contributed to revenue growth. The company's ability to expand its sales and commercial distribution capabilities, as well as its relationships with qualified third-party service providers, have also played a crucial role. In contrast, there are limited drivers of revenue decline mentioned in the provided information. However, research projects have seen a significant decline, while Hong Kong and Japan operations have shown an increase but not to the same extent as other regions. Overall, the company's focus on innovation and expansion has driven its revenue growth. The company's financial performance has taken a downturn, with both net income and profit margins experiencing significant declines. A key contributor to this decline is the reduction in gross margin, which fell from 47.3% to 40.8%. This decrease in profitability has directly impacted the company's overall profit margins, resulting in a drop from 47.3% to 40.8%. The reasons behind these changes are not explicitly stated, but it is clear that the company faces significant challenges in maintaining its financial stability. The company's financial performance indicates a significant issue with its ability to generate positive operating cash flow. Despite being in operation, it has consistently produced negative operating cash flow, as evident from the figure of RMB 110,153 on page 45. This trend suggests that the company is struggling to cover its operational expenses and may be at risk of financial instability. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, there has been a notable increase of plus 18% from June 30, 2024 to June 30, 2025. Specifically, bank and other borrowings rose by RMB 121,841, while total debt increased from RMB 125,944,000 to RMB 135,944,000. Regarding interest expenses, the company has experienced a substantial increase of plus 793% in interest expenses as of June 30, 2025 compared to the same period last year. Finance costs also rose by 9.82%. Management is optimistic about the company's future outlook. Key strategies include completing clinical trials for various products, commercializing them by 2026, and expanding internationally with new software developments. Research and development will continue to drive growth, and the company aims to accelerate product commercialization and enhance market penetration. Additionally, management may explore merger and acquisition opportunities to further expand its global influence. There were no significant acquisitions or divestitures made by the company in this period. The financial summary indicates a stable and unchanged portfolio, with no notable additions or disposals of assets. The company's financial summary reveals that they have a history of paying dividends to their shareholders. This is evident from the explicit mention on page 33, where it is stated that the answer to the question of whether the company has paid dividends is indeed yes. That concludes the financial summary. For BRAINAURORA-B, feel free to comment below, and I will be happy to answer them when possible.